Why is Bangladesh surpassing expectations in terms of having a stable economy? This was a place that was once considered hopeless, plagued by poverty and famine. That's how Bangladesh was seen for years, but then something changed. In 2006, when Bangladesh started growing faster than Pakistan, many thought it was just luck. Little did they know, it was just the beginning. Since then, Bangladesh has been on a winning streak. Its economy has been growing faster than Pakistan's, and this year, it might even beat India's growth rate. What's the reason for this alarming growth? Well, one big reason is its population growth. While Pakistan's population is growing at 2% every year, Bangladesh's is only at 1.1%. That means more money for each person in Bangladesh. In fact, if things keep going this way, Bangladesh could surpass Pakistan in per-person wealth by 2020. And it's all thanks to some changes that happened back in 2006. But what were those changes? Well, it's like solving a mystery. There's no one right answer, just some clues. But here's what we think. A big part of Bangladesh's change comes from how they treat women. See, organizations like Grameen Bank and BRAC, along with the government, have been working hard. They're making sure girls go to school and that women have more say in things at home and outside. And it's making a big difference. Because of these efforts, kids in Bangladesh are healthier and smarter. People there live even longer, that is around 72 years on average. That's more than in India or Pakistan. So, treating women better isn't just the right thing to do, it's helping Bangladesh grow too. Now, how is Bangladesh making money moves is the next question. Let's give a shout out to the Bangladesh government for backing up small business ideas that include everyone, and it's paying off. According to the World Bank, lots of grown-ups in Bangladesh are using bank accounts to do digital stuff, like 34.1% of them in 2017. That's higher than the average for South Asia, which is around 27.8%. Meanwhile, only 10.4% of Bangladeshi bank accounts are sleeping with no money moves in a whole year. Compare that to a whopping 48% in India. Now, let's talk about clothes. Bangladesh is rocking it in the garment business. Their big clothing companies are making waves, especially when you compare them to India's. Well, it's got a lot to do with different rules about workers. So, while India got its own thing going on, Bangladesh is sewing up success in its own style. Why India's work rules might need a makeover? So here's this thing called the 1947 Industrial Disputes Act. It's like a big rule book for how businesses can hire and fire folks. But some folks say it's doing more harm than good. This rule came about right before India and Pakistan got their independence from British rule in 1947. Both countries got in the deal, but Pakistan said, nah, not for us, and scrapped it in 1958, especially because they weren't too keen on dealing with trade unions from what would later become Bangladesh. So, while India is still sticking to these old rules, maybe it's time for a change. Bangladesh didn't have this particular work rule like India did. That meant it was easier for businesses to grow big and make lots of jobs. Sure, they still need better rules to keep workers safe, but not having this one rule helped them make more jobs and succeed in making stuff. Now, can Bangladesh keep this winning streak going? Well, things are looking pretty good, but there are some risks to watch out for. So, let's see how they handle it. Watch out for bumps on Bangladesh's road to success. When a country's economy starts booming, some not-so-great stuff can happen. Things like corruption, favoritism, and not everyone getting a fair shake. That can slow down the growth train if nobody puts the brakes on. But there is something even more serious. There are some folks who aren't too happy about the changes happening in Bangladesh. They're not keen on the progressive stuff going on, like making things better for everyone. If they get their way and turn things back, it could really mess up the country's progress. This isn't just a small worry throughout the history. Strong economies have hit the brakes because of people who won't budge on their beliefs. So, let's hope Bangladesh keeps on the right track. Way back when, things were different. 1,000 years ago, places like Damascus and Baghdad were the coolest spots around. They were buzzing with ideas, culture, and all sorts of new stuff, but then, things changed. See, back then, some folks got really serious about their beliefs and kind of messed things up. Instead of moving forward, people started looking back and feeling all nostalgic about the good old days. So, while those times were amazing, it's important to keep moving forward instead of getting stuck in the past. Let's aim for new adventures instead of just reminiscing about the old ones. Now, we have to talk a bit about Pakistan's story. Back in the early days, Pakistan was doing pretty okay. Their economy was chugging along fine, and places like Lahore were buzzing with different cultures and cool stuff like art and books. But then, things took a turn. Military rule came in, folks' freedoms got restricted, and some groups started closing doors to new ideas. By 2005, India was ahead of Pakistan in how much money each person was making. And since then, India's kept pulling ahead. So, it's like a cautionary tale: when a country closes itself off, it can fall behind. Now, about India and Portugal. Let's clear something up. This isn't about picking on any one religion. India is a lively place where people of all faiths live together, and it used to be growing like crazy, over 8% every year. But lately, some Hindu groups are causing trouble. They're not treating everyone equally, especially minorities and women. And they're not big fans of science and education, which could slow down India's progress. It's kind of like what happened to Portugal back in the day. They were a big deal in the world, but then things went downhill fast when some folks got too caught up in pushing their Christian beliefs. So, the lesson here? Let's keep things fair and open for everyone so we can all keep moving forward together. Bangladesh needs to stay on its toes when it comes to dealing with fundamentalism, extreme beliefs, but hey, Prime Minister Sheikh Hasina seems pretty serious about tackling these issues. So, that's a good sign. If they keep it up, Bangladesh could be heading towards some serious success, like becoming one of the top dogs in Asia. That's pretty wild when you think about where they were just 20 years ago. Now the thing is, Bangladesh's economy is doing great, but there's a downside. The gap between the rich and the poor is getting wider, which isn't so cool. So, while Bangladesh is set to be one of the fastest growing economies by 2022, they gotta watch out for making sure everyone gets a fair slice of the pie. Big problems with money in Bangladesh. So, money inequality in Bangladesh. It's been a big issue since way back in 1972, but lately, it's gotten even worse. Studies show that folks who don't have much money are really struggling to get by. They're having a hard time putting food on the table and making ends meet. And when the country makes more money, it's not really helping out the folks who need it most. Instead, it's mostly going to the people who are already rich. Economists are really worried about this huge gap between the rich and poor. In fact, Bangladesh isn't doing too great on the global scale when it comes to how fair things are for everyone. Here's the scoop. The bottom 40% of people in Bangladesh only get about 21% of the money, while the richest 10% get a whopping 27%. That's a big difference. And to make things even trickier, the pandemic's second wave and lockdowns could slow down the country's progress. At the same time, with travel restrictions, things like migration, money sent back home, and selling stuff to other countries, exports might take a hit. So yeah, it's a tough situation all around. Bangladesh's story is full of twists and turns on that note. On one hand, it comes a long way in the last 50 years, getting closer to being called a lower middle income country. That's pretty cool. Even with all the chaos from the pandemic, Bangladesh's economy still managed to grow by 3.8% in 2020, says the International Monetary Fund. And they're expecting even better growth, around 4.4% in 2021 and a whopping 7.9% in 2022. But not everything's rosy. A study from BRAC, New York University, and UN Women found some not-so-great stuff. Like, 36% of kids under 5 aren't getting the right nutrition, which is making them shorter and lighter than they should be. On the other hand, there is a big problem with young people not being able to find jobs. About 12% of them are struggling to find work. So, it's better to say that Bangladesh is on the move, but still, there's work to do to make sure everyone gets a fair shot at a good life. Let's get real about Bangladesh's economy for a minute. Things aren't looking too great, especially with what's been happening during the coronavirus pandemic. One big problem is that child marriage rates went up during the pandemic. With life slowing down and jobs becoming scarce, families felt forced to marry off their young girls, even though it's against the law in Bangladesh. Shockingly, more than 77% of these brides were under 18, and 61% were under 16 when they got married. Another big hit from the pandemic? Education. Schools shut down, and it's been tough trying to figure out how to bounce back. Also, many families had to borrow money from not-so-official lenders just to get by, which left them in even more debt. So yeah, Bangladesh had some serious challenges to tackle, but with some effort and support, hopefully they can turn things around for the better. So here's what went down in the study. Researchers talked to 1,056 people in November and December 2020. They chatted with 425 folks who work in the RMG industry, 425 who don't, and 206 people who came back to Bangladesh after working abroad. Now let's talk about the big issue: money inequality in Bangladesh. It's getting worse real fast. Only a small group of folks are grabbing most of the money, leaving the rest of the country with not much. Way back in 1984, the richest 10% of people had 21% of the money, but by 2010, that shot up to 27%. Meanwhile, the poorest 10% saw their share drop from 4.13% to 3.99%. Even though they have achieved a lot of good things, there is one area that's got folks really worried, and that's how money is shared out. You see, back when they fought for their independence, one big goal was to make sure everyone got a fair shot at making a living. But sadly, things have been going in the wrong direction since the 1980s. The latest survey by the Bangladesh Bureau of Statistics found that average Gini coefficient, which measures how fair money is spread around, went up from 0.458 in 2010 to 0.482 in 2016. That's not good news at all. Just to give you an idea, back in 1984, the Gini index was 25.88, but by 1996, it had shot up to 33.46. Changing places in Bangladesh, things have shifted in Bangladesh over the years. All the way back in 1971, most folks, over 90% of them, lived in villages. But now, about 70% of people still call the countryside home. But more and more folks are moving to the big cities. Dhaka, our capital, used to have just 2% of the population in 1980, and now it's up to 10%. What is the crucial reason for this shift? That's one thing everyone is curious about, just like us. Well, it's got a lot to do with how things are set up. Say, because everything's so centered in Dhaka and Chattogram, folks living there tend to make more money than people elsewhere. Sure, the country's been making more money overall, which is great, but there is a downside. The gap between the rich and poor is getting wider, and this whole centralization thing, it's causing more people to pack up and move around the country. Sure, we've been hearing a lot about how much it's been growing lately, but not everyone is feeling the benefits. See, the numbers say the GDP, that's how much money the country makes, has been going up a lot since 2013, which is pretty cool. But at the same time, the gap between the rich and poor has been getting bigger. Now, even though the economy is growing, it's not making enough new jobs or raising wages enough. So, while we are seeing what they call jobless growth, where the economy gets bigger but people aren't finding work to earn money, even though things have been moving forward, the progress in reducing poverty has been pretty slow. At the same time, the gap between the rich and poor is getting wider. The government hasn't been spending as much on important stuff like education and healthcare as they used to. And when they don't invest in things that help workers do better, it makes it even harder for folks to climb out of poverty. Not only that, but there's also a big problem with fairness. How does the system vary for different classes? Some people have easy access to things like healthcare, education, and money services, while others don't. And when the government helps out certain businesses or groups, it's usually the rich ones, leaving the poor behind. Even though there are programs meant to help the poor, they're not doing enough to really make a difference. And because of all the sneaky ways money gets wasted, the poor don't get as much help as they should. Let's talk about what's going on in Bangladesh right now. There's a big problem with not having enough fuel, and it's causing trouble for the country's industries. That means production is getting messed up, which isn't good for anyone. And there are other problems too on top of this entire chaos. Inflation, which means prices going up, is getting higher. A report from the World Economic Forum based in Switzerland talked about these issues. They released the report just before their big meeting in January. The World Economic Forum found out some serious problems. They looked at all the risks for the global economy, including ones specific to different countries like Bangladesh. The WEF released their Global Risk Report 2024 a few days after the World Bank said that the global economy won't be growing much in 2024 because of the pandemic. Now, the WEF talked about risks in the short term, that's the next 2 years, and the long term. They listed out 10 big risks like fake news, bad weather, and conflicts between countries. A local group called the Center for Police Dialogue helped out with the research. They talked to 71 companies and found that one of the biggest risks right now is not having enough fuel. That's causing problems for industries like ceramics, steel, and textiles because they need gas to run. The folks in charge are giving out gas to factories, but there's not enough to go around. Big companies that sell stuff overseas are getting what they need, but smaller ones are missing out. Even though the government said they would make sure there's enough gas when they raise the prices, it's not happening. And the cost of electricity went up too, making it more expensive to make stuff. That's what the WEF report says. Now, let's talk about inflation. That's when prices go up for things we buy. It's the second biggest worry for businesses in Bangladesh right now. To be frank, how does the inflation affect a country? Inflation doesn't just affect them directly by making things more expensive, but it also messes with long-term plans. People start asking for more money, and it's harder for businesses to plan for the future when prices keep changing. And high inflation can mess up our trade balance, make it harder to buy stuff from other countries, and hurt businesses trying to sell things abroad. So, it's certainly causing a lot of headaches all around. Another common fact, it's not just Bangladesh that is getting the heat of inhalation, the entire world is under its grasp. Only thing the world as a whole is focusing on is to stay afloat during such times. The pandemic's effect itself took so much time. Many countries took a few years to heal, and that's the real truth. Be it Bangladesh, Italy, or the US, so if this recession is similar to that of the 2008 recession, just like the rumors, the whole world will go into a mend. So, if Bangladesh plans on staying prepared and plan on staying at least a bit afloat, they have to work on the weaknesses and boost their strength as soon as possible. That would definitely give them an upper hand in during tough times and normal economic conditions. And that should start from the redistribution of opportunities and wealth. Also, cutting down on unwanted practices like child marriage and suppression of the poor is a must to stay on track. Do you think Bangladesh will only continue to grow over years? It would be great if you could talk about it in the comments below, and also hit the like and subscribe buttons to keep watching such interesting content.